All right, good morning, everybody. Just give me 1 second. Just trying to set up this meeting. All right, I'm just getting everything set up. Give me 1 second. Morning, everybody. Just getting set up. Just wanted to start off with our free alert service. Just want to introduce that. So we do offer free educational alerts. All the information can be found on our website here. We do have our disclaimer as well. We did take a loss, but we're working to come back from that loss, to recover from that loss. So please be patient with me. It's my first time offering a service like that, so I've been working out some of the kinks. So thank you for tuning in each week, and we'll get into the analysis. So let me pull up some of these tabs. All right, so. All right, so just want to let you guys know that every week that we come to the market, we're entering or we're using dollar cost averaging on the higher time frames. So if we're in some drawdown, hopefully you put a stop loss that is able to hold that drawdown until we're able to get on the right side of the market. For now, it looks like we are getting a small bullish reaction from this week. So hopefully we close bullish this week, and we'll be looking to continue up, for next week. So we did break below our weekly zone on AUD/USD. So we're currently in order block demand, and we're looking to see if price will reverse from here. So just to run through the watch list real quick before we get to the fundamentals, I just want to review the technicals. So you can see that our market structure is remaining bullish for now till we break below this low. We're currently in our weekly zone, looking to see if we can get a break of this trend line. And then we would be looking to target this quarter point to the next quarter point. But obviously, if you're able to enter today, you're getting better pricing than our original trade idea. So yes, please be mindful that this is the safe entry up here. We would be using a little less risk entering in the market now. All right. So then we got GBP USD. So same market structure is bullish now after we broke our bearish trend. We're in our weekly zone. We got our trend line break. Looking to see if we could clear the open of this previous week candle. That would confirm the bullish setup, but we're already at our entry for our trade idea right now on GU. So entering now, our stop loss is below the low, and we're looking to take it up to 250 pips. Okay, so GBP Swiss franc has been the pair that's been moving the most, as well as NZD Swiss franc. But as you can see, market structure is still bullish. We're we came down a little bit lower to our weekly zone, but we had a nice positive reaction. So after I go through these setups, I'll take off all the trade ideas and be able to just see price. So for now, just know that we're at our entry for GBP Swiss franc. So GU and G Swiss would be trades for next week. I believe AU wasn't ready, or AU is at entry right now as well. AU Swiss franc was not ready, but it looks like it could potentially turn around. So AU, GU, G Swiss, all at our entries right now. So be sure to enter. NZD USD is approaching our entry, but doesn't look like it's necessarily at our entry. It's a little bit below, but we do have that break of our weekly counter trend line. So we're looking to take this momentum up to clear the highs. And then NZD Swiss franc didn't really get to our entry, but we do have a break of a counter trend line. Let me get rid of this extra one. Break of the counter trend line, and then we already cleared the highs of, was it 2 weeks ago? So it'll be interesting to see if this trade is going to play out. So we'll watch it. NZD Swiss franc, we didn't really get our entry, but if we're entering today, we're still catching most of the move. So just to run back through, AU is at entry, GU is at entry, G Swiss is at entry, and I believe that was it. NZD USD and NZD Swiss franc are not at our entries as of yet. So we'll take a little break right there, and we'll look at the economic calendar before we get into the fundamentals. So let's look at the news for today. It's 9 o'clock. So let's see, we got in 38 minutes, S&P Global Composite PMI, Services PMI. In about an hour, we got ISM non-manufacturing employment, ISM non-manufacturing PMI. So those will be the only ones we'll be worried about for just now. So we'll read those, and then we'll read the news for next Friday, just to be preparing for it. Okay, so let's share this tab instead. Once it's done loading. All right, let's give that tab a second to load. We'll share this tab instead. So we got S&P Global Composite, Services, PMI, ISM non-manufacturing employment, ISM non-manufacturing PMI. So we're just waiting on one of the pages to load. All right. So I'm just going to read the descriptions that investing gives about each of these news events, if there is a description. So it seems like the PMI for the S&P Global doesn't have a description, has a chart. Let's see, what does it say? So forecast was 47.5, actual was 50.2. So we did go up. Not sure exactly what that means. Okay, so it says right here, 50.2, forecast 47.5. So yeah, we'll eventually learn what some of these things mean. For now, I'm still pretty new to the fundamental side of things, so bear with me. And then let's get the next one open. Services PMI. All right, so the service PMI release is published monthly by Market Economics. The data are based on surveys of over 400 executives in private sector service companies. The surveys cover transport and communication, financial intermediaries, business and personal services, computing and IT, hotels and restaurants. An index level of 50 denotes no change since the previous month, while a level above 50 signals an improvement and below 50 indicates a deterioration. A reading that is stronger than forecast is generally supportive for the USD, while a weaker than forecast reading is generally negative for the USD. So before we were below, so now we're above 50. So it's saying that it's stronger for the USD. So we'll keep that in mind. It is NFP today, non-farm payroll, because the first Friday of the month. So do be mindful of that. We want to see how the volatility is going to enter the market and which direction it'll go in. So let's look at the other news articles. All right, so the ISM Non-Manufacturing Employment Institute, I believe we read this last week, so we'll just go based off the reading. So previous, it was 49.4, actual is 50, so that should be taken as a, well, I guess it would be flat. It's not necessarily positive or negative because it's at 50 on the dot, but yeah, we'll just leave that at that. All right, and then non-manufacturing PMI. All right, so let's see. So forecast was 50.4, actual was 55.2, so that is positive for the US dollar. So we'll keep that in mind. All right, so let's look at the news for next week, Friday. All right, so we got non-farm payroll is going to be released next week. And let's see, we got 8:30 news. All of it's at 8:30, except for the federal budget balance, which is at 2 o'clock. So we'll just go through the 8:30 news. So let's do average hourly earnings month over month. And we'll just take stock. So previous 0.4, the latest release was February the 3rd. So last month came out, it was 0.3. So they're forecasting 0.3, and higher than expected is positive. So we'll wait to see when that comes out, if it's going to be higher than 0.3, which would be bullish for the US dollar, or negative, which would be or less than 0.3, which would be negative for the US dollar. So we'll wait for that to come out next week. Year over year earnings. All right, so last release was last month. So the forecast is 4.3, and the previous was 4.8. So it dropped last month. So we'll see what's going to happen for this month. It doesn't say much about if it's positive or negative, but we'll just assume that if it's higher than forecasted, it'll be positive for the US dollar. All right, so non-farm payrolls. All right, so non-farm payrolls measures the change in the number of people employed during the previous month. Excluding the farming industry, job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as positive, and a lower than expected reading should be taken as negative. So the forecast is 185 for next month, I believe, and it was 517 for last month, so which was positive, and we'll see what happens next month. All right. Participation rate. Participation rate is an important indicator of the supply of labor. It measures the share of the working age population either working or looking for work. The number of people who are no longer actively searching for work would not be included in the participation rate. A reading that is stronger than the forecast is generally supportive for the US dollar, while a weaker than forecast reading is generally negative for the US dollar. So previous was 62.3, actual 62.4. That was last month. So it went up. So that's supportive for the US dollar last month. So we'll see what happens this month. All right, so we got private non-farm payrolls. All right, so private non-farm payrolls measures the change in the number of total number of paid U.S. workers of any business, excluding general government employees, private household employees, employees of nonprofit organizations that provide assistance to individuals, and farm employees. A higher than expected reading should be taken as positive or bullish for the USD, while a lower than expected reading should be taken as negative. So the forecast is 190K. Last month, the actual was 443K. So that was positive. So we'll see what happens for this month. And then the last thing is the unemployment rate for February. All right, so the unemployment rate measures the percentage of the total workforce that is unemployed and actively seeking employment during the previous month. Higher than expected reading should be taken as negative or bearish for the USD, while lower than expected reading should be taken as positive. So the forecast is 3.6%. Last month we were at 3.4%. So that was lower, which is positive for the US dollar. We'll see what happens for this month. All right, so let's just look at the watch list real quick again. So I'll take off all of these. So AU, as you can see, let's make it a little bit bigger. Hopefully that's big enough for everybody to see. We have this weekly counter trend downtrend. Obviously structure is still bullish. Higher time frame structure, we broke our bearish structure, have equal highs at this high right here. So it will be interesting to see if we can sweep the liquidity above these highs before retesting possibly and looking for higher pricing. So let's look at AD Swiss franc. All right, so pretty much similar situation happening. Looking to see if we can take these highs. We've already broken above this high, which confirms our bullish structure. So we're in a pullback right now. This would be the range that we're looking at to see how we react in our zone. All right, so GU, bullish structure, taking the highs, pulled back. We did sweep below this low. So that's interesting to note. It's possible that we could go down further. So we'll watch for that. But for now, we'll just enter off the break of this counter trend line for the buy signal at the quarter point. All right, so similar to GU, the only difference is we don't have obvious structure broken yet. So we're still consolidating, kind of. We're at the lows, so we're taking this, looking to see if we can sweep the liquidity from these equal highs. And if not, then we'll see if price will possibly push down, give us better pricing in our zone, then we could take it up. NZD Swiss franc. So like I said, in the zone, market structure is still bullish, did break below this low, but this demand was a strong demand, so it'll be interesting to see if it'll service supply to get maybe better pricing. But for now, we're just going to take this counter trend line break and take it up. All right, so similar thing for NZD Swiss franc, taking the counter trend line break to take it up. Only thing is that we do have divergence between NU and NZD Swiss franc, bearish divergence signal. So it'll be interesting to see if that bearish divergence is strong enough to hold, or if it was just a divergence for the pullback. which is possible. So we could have got a divergent signal for the pullback to then take it up. All right, so let's look at crypto. So Bitcoin, bullish structure. We got pullback here that was broken, made a new high. Looking at another pullback. Let's see if it's going to get broken. Looking to take positions today. And then also if we were to break this structure high, this candle high, then we'd look to possibly enter on the retest of the next candle. So we'll see what happens with that. All right, so Ethereum is pretty much the same setup as Bitcoin. Let me drop my trend lines in. So we're just waiting to see if those will break. SPX. I'm already in SPX for the buy off the quarter. So we'll take a look and see how that moves. NASDAQ. Let's see. So we're just waiting for the trend line to break, but this bullish momentum is pretty strong. We'll see if this supply zone would hold or if it's going to get disrespected, and we could take it out off the retracement. All right, gold, we got our counter trend line break, so we're looking to take this up. And then silver, I don't know if I would consider that a counter trend line break. Probably not, but we don't have any supply zones. Obviously, the only supply zone we have is up here, so we'd be interested to see how price will play this range, or if it'll look for lower pricing before turning around. All right, so let's look at some news. All right, so we have this news that came out 6 hours ago. Dollar heads for losing week. Euro gains on hawkish Lagarde comments. The U.S. dollar weakened in early Europe trade Friday, on course for a weekly loss amid uncertainty over the extent of the Federal Reserve's future tightening path. The dollar index, which tracks the greenback against a basket of 6 other currencies, traded 0.2% lower at 104.782, dropping back from the 2-month high of 105.36 seen at the start of the week. Dollar index is on course to fall 0.4% this week, which would be the first losing week since January. Hitting the greenback was the suggestion that the Fed may stick to its moderate monetary tightening path for the market, following comments by Atlanta Federal Reserve President Raphael Bostic. Bostic said he favored slow and steady as the appropriate course of action for the Fed, arguing for a hike of 25 basis points later this month, adding the impact of higher interest rates may only start to be felt in the spring. A series of robust economic data releases, including inflation providing to be sticky at elevated levels, had got traders thinking that the U.S. Central Bank could deliver a 50 basis point hike in 2 weeks' time. Elsewhere, Euro USD rose 0.2% to 1.0617, climbing off a near 2-month low of 1.0533 at the start of the week. Inflation has come in higher than expected in the Eurozone this week, pointing to more interest rate hikes by the European Central Bank on top of the 50 basis points that have already been signaled for mid-March. ECB President Christine Lagarde said on Thursday that interest rate increases may need to continue beyond the planned move, as policymakers will do everything to return inflation to the 2% target from the current above 8%. Morgan Stanley raised its forecast for the ECB terminal rate to 4% earlier Friday from its earlier prediction of 3.25%, citing the region's hot inflation numbers. Central bank's key rates currently stands at 3%. GBP USD rose 0.3% to 1.1980, remaining under 1.2 as expectations grow that Bank of England will pause its tightening cycle before its major peers, given the weakness of the UK economy. USD JPY fell 0.2% to 136.47, with the yen helped by the easing of US yields, while inflation in Tokyo eased from an over 40-year high in February, data showed on Friday, but still remained at relatively high levels. NZD-USD rose 0.2% to 0.6227, AUD-USD climbed 0.3% to 0.675, and USD-CNY fell to 0.2% to 6.9018 after Chinese services activity data grew at a faster than expected pace in February, pointing to a recovery in the second largest economy in the world. All right, so it looks like China's economy is starting to recover. All right, so let's look at some crypto news. Okay, so let's look at this one. Dollar sharp recovery puts Bitcoin's 25K breakout prospects at risk. Sorry about that, we're back. So let's go back to the article. Bitcoin investors reeling from the shock of recent cryptocurrency company failures and banking issues may face another potential problem, a recovering United States dollar. Notably, the US dollar index, which tracks the greenback's performance against a basket of top foreign currencies, has risen 4% from its February 3rd low of 100.82 amid anticipations that the US Federal Reserve will continue raising benchmark rates to cool inflation. Inflation persists. ISM manufacturing prices paid. Okay, so that's just talking about charts. All right, they're trying to get me to go to another website. That's not about to happen. All right, let's see. All right. So we got this that came out an hour ago. Fed's interest rate hike to seriously affect risk assets, says strategist. Bloomberg senior strategist Mike McGlone says the Fed's interest rate hike would affect risk assets like BTC. The necessity of the assets to be resilient at the beginning of March was asserted by McGlone. The ambiguities regarding the possibilities of BTC driving down toward a weaker position came under McGlone's discussion. Mike McGlone, the senior commodity strategist for Bloomberg Intelligence, the research arm of the television network Bloomberg, asserted that the risk assets, including Bitcoin, would be highly affected by the continuous interest hikes by the Federal Reserve. Interestingly, the senior strategist reiterated that the efforts of the Fed to lower inflation despite the chance for recession would be a headwind to the crypto assets, noting Fed tightening, despite the risk of a recession, could be a primary headwind for most risk assets, notably cryptos. Buy and hold investors may warrant some protective insurance for the potential that the bear market isn't over. Notably, McGlone shared a Twitter thread on his official account commenting, "Don't fight the Fed. Bloomberg Intelligence Crypto Outlook March edition, straightforward risk versus reward, more tactical focused outlook this month. Don't fight the Fed, particularly that markets have bounced." Significantly, McGlone posed the necessity of the risk assets, especially crypto, to stay resilient at the beginning of March, as the federal fund rate was 0 a year ago and is still approaching 5%. In addition, he raised the ambiguities regarding the current position of the crypto, adding whether it could dive deeper to a lower position than in 2022. He stated, "What if crypto equity haven't seen their lows? Crypto and equity prices have bounced, which may leave them vulnerable to resuming 2022 downward trajectories. The stock market can be one of the world's most powerful forces when it declines, and the Fed tightening amid elevated recession risks are solid headwinds." Further, he reaffirmed that this month would prove whether crypto would remain resilient despite the Fed's tightening monetary policy, referring to the key price levels for Bitcoin as 25,000. The post-Fed's interest hike to seriously affect risk assets, says strategist appeared first on Coin Edition. Okay, I don't know what that means. All right, let's look at commodities. and then that'll be it. All right, so it said gold prices rise on some Fed clarity, set to snap 4-week losing spree. Gold prices advanced on Friday. When was this come out? 13 hours ago. Gold prices advanced on Friday and were set for their first weekly gain in 5, as recent comments from Federal Reserve officials help provide more clarity on the path of monetary policy this year. Atlanta Fed President Raphael Bostic reiterated the case for a 25 basis point hike in March, while Fed Governor Christopher Waller said in a separate speech that moderating inflation and economic growth could call for rates peaking at an earlier forecast of 5.4%. They both warned that any signs of an overheated economy could invite more hawkish moves by the central bank. Still, metal markets took their comments in stride, extending earlier gains seen this week. Spot gold rose 0.2% to $1,838 per ounce, while gold futures rose 0.2% to $1,844 an ounce. Both instruments were set to add about 1.5% this week, their first positive week since mid-January. But the yellow metal was still nursing sharp losses in February, following signs of stubborn U.S. inflation and a strong labor market. Treasury yields also rose overnight while the dollar firmed as data showed U.S. jobless claims fell further in the past week. Focus on Friday is on a reading on the U.S. service sector activity with any signs of economic resilience, giving the Fed more room to raise interest rates. Rising U.S. interest rates bode poorly for metal markets, given that they drive up the opportunity cost of holding non-yielding assets. Gold and its peers had logged steep losses through 2022 as the Fed began aggressively raising interest rates. But the prospect of an eventual pause in rate hikes helped metal markets recover from recent losses this week. Platinum futures were set for a nearly 7% weekly gain, snapping a 7-week losing streak, while silver futures were set to rise 1.2% after 6 straight weeks of losses. Industrial metals also advanced this week as stronger than expected Chinese business activity data spurred bets on a recovery in the world's largest commodity importer. Copper futures rose 0.2% to $4 a pound and were set to add more than 3% this week. But the red metal logged steep losses on Thursday amid growing fears of a U.S. recession this year, which could significantly dent industrial activity. Data also showed this week that U.S. manufacturing activity has consistently declined over the past few months. All right, so that's the news. We'll get to our fundamental analysis, and then I'll let me see if there's any questions now. Actually, all right, I don't see any questions. All right, so let's look at Australia 10-year yields. So as we can see this week, we've been pulling back, but we've been pretty much bullish. So we're gonna, ride this trend up. The 10-year yields, I'm waiting to see if they'll break some of these structure highs as a, fundamental leading confirmation for our trades in Australia. So the Australia, I believe these are the futures. Yeah. So the futures, we're still pulling back. We did have a slight bullish trend, bullish candle this week. So we'll see how this week closes. It looks like it might close bullish. So that would be a nice indication of Australia, currency value increasing. The index pretty much looks the same as the futures. That's something you can know for all of them. And for some reason, the futures and index are going against the 10-year yield. So I'll be interested to find out more about that, because I know that the yields, as they increase, that increases the value of the currency as well as the indices. So the futures and the index. So we're looking for bullish signals on all of these. All right, so GDP 10-year yields, we've already cleared these highs. So that's a nice indication that we are bullish on Great British Pound fundamentally. For the futures, as expected, we are creating a bullish close this week. So that'll be interesting to see if we're able to break this counter trend line and keep going up. And I'm expecting to see something similar on the British index. So As you can see, we have possible bullish close this week. NZDs, we've cleared both highs, which is great. NZDs fundamentally are showing strength by the 10-year yields. So this is a good time to invest in NZD currencies, risk on. We are getting what it looks like to be a weekly counter trend line break. So that also confirms our fundamental bias. And as well on the index, it looks like NZDs might be the strongest pairs to trade for this week. So if any pairs I would be looking at to trade this week, it would be NZD Swiss franc, although we're not at the quarter anymore. So we would just be going based off the momentum and the fact that we broke our counter trend line. And GBPs, although not as strong as the NZDs, fundamentally we did clear this high. So I'll be looking to trade GBP Swiss franc this week as well, because the technicals and the fundamentals are lining up regardless of what the news is saying. So that's the pairs that I'm watching for this week. So let's see, what pairs was I watching for last week? So we'll go back and look at some of the pairs I was watching for last week. It should be pretty much the same. All right, 1 second, guys. Just trying to see if I can find the list from last week. Okay. All right, so we were looking at GBP USD, which is at the quarter point. So we were watching to see if we could get an entry. Then we have GBP Swiss franc, which already broke above the quarter point. So we're looking to catch entries from this quarter point. And I'm going to adjust this. All right, so yeah, we'll just look at those. I believe NZD USD was also the last one. So let me all right. So NZD USD was at the quarter point last week, but we broke below. We're reapproaching it. So NZD USD would be nice to watch for the continuation from the quarter point. So those are the updates from the pairs we're watching from last week. So this week we're still watching GBP Swiss franc, but we're adding NZD Swiss franc because we did get the confirmation technically with the counter trend line break, even though we're not at the quarter point. So we're just going to watch those. All right, and let's see if I got any questions. All right. So that's pretty much everything I got for you guys this week. I just want to review. We're taking entries on everything. AUD USD is at the quarter point. AUD Swiss franc is not. GBP USD is at the quarter point. GBP Swiss franc is at the quarter point. NZD USD is approaching the quarter point, and NZD Swiss franc is not at the quarter point. The pairs that have confirmations: GBP USD, GBP Swiss franc, NZD USD, and NZD Swiss franc. Out of those, only GU, G Swiss, and those are the only two that are at the quarter points. So NZDs are not at the quarter points, but they do have good confirmations for the setup. So if you want to take those, do so at your own risk. But guys, that's going to be it for this week. Just to review, you can follow our signals at signals.forexfreeclub.com. And if you have any questions, to message me. I'm always available. So you can go here to sign up for email alerts. You need to register account first, and then you would go to view signal and you would choose to follow the signal. Don't mind the loss. We are coming back. We took a lot of trades. I was in drawdown, but we'll be able to get back. So follow the signal, email alerts, and then you would have to log into your account to register for those alerts. So I hope that makes sense. Trading of currencies, any asset class does carry risk. So please make sure that you are trading at your level of comfortability and risk appetite. And also do not take these trading signals as advice, financial advice to make a profit. These are purely for education only. So guys, join us again next week at 9 o'clock, and we'll be taking entries again. Remember that we are doing dollar cost averaging, so we are expecting the market to pull back against us while we get better positioning for a long-term swing. So I hope you have a great weekend, and we'll see you next week. Have a good one.